A rapid rise in gold prices has turned off buyers in India who are holding off on purchases. This is what the World Gold Council has to say on the big plunge in gold demand this March quarter. What does it mean for you? Will the yellow metal shine in the near future? Let's take a look.
The yellow metal is shining bright, maybe too bright for customers. High prices have unnerved buyers in India, keeping them away even during the peak wedding season during the winters. According to the latest World Gold Council figures, sales of gold slumped 18% in the January-March quarter from a year earlier. Even the demand for gold jewellery slumped 26%. There was, however, a silver lining, with people flocking to gold as an asset in times of uncertainty, and sales of gold bars and coins were up 5%. According to the World Gold Council, fewer auspicious days for weddings and the decision by many households to delay purchases in anticipation of a price correction added to the decline. Add to that inflation, which continues to squeeze disposable incomes. All factors adding up to reduce the flavour for the precious metal. Jewellers are now pinning their hopes on Akshaya Tritiya for a sales boost. The festival, which is the same day as Eid ul-Fitr on the 3rd of May, has spurred some buying, but high prices are keeping customers away. Though gold prices have fallen to under 53,000 rupees per 10 grams from the recent high of 55,350 rupees about just 10 days ago, they're still nearly 5,000 rupees more than what they were a year ago. The big reasons for this: the ongoing war in Ukraine, surging inflation, and a burnished global economic outlook. However, analysts are seeing gold prices drop on an unexpected hike in interest rates across the world, led by the US. Demand is also likely to receive support from festival purchases and wedding season buying in the next quarter. Bureau Report, Business Today Television.
Mr. Somasundaram joining us now from the World Gold Council. Everyone is looking at the kind of price increase that we're seeing ahead of the season this time. Mr. Somasundaram, tell us really what are some of the metrics that you're observing right now and the kind of reaction we're seeing to these gold prices.
Yeah, as this saw, the prices actually shot up very, very sharply in this quarter. We first of all had a very, very good December quarter last year, December 2021. It was in fact one of the best quarters for India in our data series over 25 years. Okay. And that is because, we started coming out, lockdowns were relaxing, prices softened, and people started, associating gold with various functions, which all came back. Now, following from a very, very good December quarter, the trade was expecting that January quarter 2 would be a very good one. But that was not to be, because initially, January, we had the third wave. While it was not as bad as the second wave, it did mute many celebrations, many weddings, etc. became again muted affairs. And soon after that, we had a period of inauspicious dates, so there were not many weddings. And then March, you saw this conflict brewing, which impacted the price, and it started going up. Now, what happens when prices normally go up is consumers wait and watch, because they like the prices to go up in the long term, but in the short run, when it goes up, they want to be very sure that it is a sustainable price increase. So anecdotally, we heard from many jewelers that people came, they looked at lots of jewelry, but then when the price was quoted at 55,000 including GST, they said, okay, we will probably come back next month. So that is to be the general narrative now, saying that, look, we will wait for the price to subside.
So what would you suggest to someone looking to invest in gold? What's the best way to go about it? Which are the instruments that you would look at?
Yes. See, gold, particularly when it comes to India, when you think of gold, you think of a jeweler. Okay, you really want to go to your family jeweler first, and then maybe somebody trusted, some branded jewelers, etc. But there are other ways of buying gold now. One is obviously if you're just wanting to make the price, want to have a play in the price, ETF is a good way. You have ETFs which are quite liquid in the market. So you could go and buy ETF. There are some charges, obviously, but ETF is a good play. You can buy a sovereign gold bond. Again, sovereign gold bond, the point is there are only primary issues. The secondary trading is very limited. You still can get it, for people who are having small amounts of money. You can still go into the market and get it. It's normally available at a slight discount to the original price, so you can get that. You can buy digital gold in small things. There are 2 or 3 parties. I know it is not regulated, but they are still safe. They are kept in a separate vault, and this is done by a few reputed players. You could buy it in small quantities there. It's even available on platforms like Amazon. And then you come to the physical gold, which is always available. Now, when you buy the physical gold, of course, today hallmarking has been made mandatory, but you've got to take extra care when it comes to buying physical gold, because at these prices, even if there is a 1% variation in the purity, you're losing a lot of money.